Welcome back. Pharma and IT really stand out. Look at Aurobindo Pharma now, 910 on that stock. This year it was at 350 odd after that disappointment from the US Fed. And after that, just look at the move that we have seen in the stock. It's almost 200% move that we have seen from its lows. NIIT Tech is the other one which has been a rank outperformer. Just look at the last 3-month move on the stock from 1200 all the way up to 2000 in today's trade. So these have been the two standout outperformers. You can add a Torrent Pharma as well, perhaps. That's also starting to look good. Divi's Labs ahead of numbers. Godrej Consumer, by the way, is making a bit of a comeback. So a lot of stocks doing well. Let's get the BTST calls then. Ashwani and Mitesh with us. Ashwani, your thoughts on index and your BTST calls?
See, exactly the kind of stocks you should be in. People need to move on from this HDFC Bank and ICICI Bank and Kotak, etc. They are yesterday's winners. So obviously today the strong and the weak groups are kind of balanced. I think the next 100 rupee move on Reliance will possibly take the market up. So I still have long positions, and like I said in the morning, use declines today to build on those positions. So having said that, Adani Enterprise buy with a stop of 183, target of 197. Infosys buy with a stop of 958, target of 980. And Balkrishna Industries buy with a stop of 1340, target of 1400.
Okay, all right. Those are Ashwani's calls for this half hour going into tomorrow. Mitesh, let me come to you as well. BTST or STBT?
BTST calls, Surbhi. I have buys on Glenmark with a stop at 455 for targets of 470, and both PFC and REC are showing some traction. Maybe they'll see follow through for the next couple of days. So PFC is a BTST with a stop below 85 for targets of 88.
Okay, all right, gentlemen. Thanks for those trading calls. Let's just get back to the market as well and see what the picture is like. There's some recovery back. I mean, the Nifty hasn't reclaimed 11,200, but it hasn't collapsed either. So, Anuj, sort of muddling along the range today, how do you look at it? Now, there seems to be some semblance of stability.
Yeah, some semblance of stability. But you know what, Surabhi, I'll just give you a very interesting stat, which is, I mean, if you see what has happened to the market this year, and this is really remarkable. It's happened after a long time. The Nifty 50 this year is down 8%. The Bank Nifty this year is down 33%. And the market leadership has been decimated. This is a tectonic shift which is happening in our market, which is the banks are losing leadership. And at the same time, look at what the pharma index has done. It's up about 42%. And what the Nifty IT has done this year, it's pretty much flat. So there's a big shift which has happened. Now the issue is that even though the bank's weight has come down in the index, they are still about 30% of the Nifty. And that's why as long as this 30% is just refusing to participate, the market will have some bit of a problem. The other legs which are now increasing their weight, for example, Reliance has moved to 15% in the index. IT and telecom put together, I mean, all these three put together are now moving to almost 33 to 35%. So that I think is a big positive. Pharma, of course, has been a very strong sector, but there are not too many pharma stocks in the index. I think that will change. Going forward, you will see a lot of pharma names coming back into the index. There was a time when, almost every pharma stock was thrown out of the index. Now you will go through a process where, stocks will start to make a comeback. And some of the financial names would go out and some of the pharma names would make a comeback in the index. So that whole process is on. And that's why it's best reflected in the indices outside of the Nifty, the sectoral indices, and also indices like Nifty Junior, etc. And that is where I think, you would find a lot of value still in this market, which is if you were to remove these 8 to 10 heavy stocks which are not able to participate, X of that, the market has looked strong. Even today, advanced decline has been quite strong.
Oh, yes, absolutely. And what a change, right? We remember till last year, the standard dialogue of most people in the market would be, market can't go up without financials. Financials are the big leaders, and how that truth has really changed into something else in a matter of 6-7 months. Well, on that note, let's get you some more opinion as well on the market. We did catch up with Sanjeev Prasad, MD and co-head of Kotak Institutional Equities earlier in the day. Now, Sanjeev says that lower stimulus in India is one of the reasons why the equity market here is underperforming.
As of now, you have 3 markets in India. One is the quality non-financials, which have rallied very hard, from the mid-March bottoms. And many of these stocks in the consumer staples, IT, pharma, telecom, and I'm including Reliance in that category. All the stocks are, up 10 to 40% compared to the pre-COVID prices. Broadly speaking, it's on a top-down basis, the market is slightly tricky because, you have so many constituents, all trading at such divergent valuations and with such different, triggers. I suppose it's best not to take a top-down view of the market.
What will you admit in your arc in terms of IT stocks? I mean, I don't know if you spoke in detail about them. We just spoke to a couple of IT companies, Intellect Design, Birlasoft. All of them are reporting excellent deal wins, even if there is dislocation in the quarter gone by. We heard strong guidance.
The companies look fairly valued on maybe immediate numbers, but what seems to be coming out is that the short-term impact of COVID pandemic is probably not as bad as what people had assumed in, let's say, March, April. So the point you made about, deal wins, etc., that pretty much continues. And also, if you look at the first quarter numbers of all the companies that reported, they could actually benefit a lot from a lot of savings. Some of that will probably go away over time, but at least the immediate impact in terms of both the revenue line as also EBITDA may not be as bad as one had assumed earlier, and that's why you have seen a reasonable big rating in the multiples of the stocks.
Yes, in July the sales have improved, but valuations have become very rich for many of these auto stocks, whether it's Maruti or even the two-wheeler names. How are you approaching this space now?
We had taken a reasonably positive view on this in March, April, when the stocks had come down quite a lot. And at that time, our view was that the rural recovery would be a lot faster than the urban recovery, given the fact that COVID situation at that time was largely confined to urban India. And the second fact was that, it was pretty clear that the government would, support the rural economy, whatever little, fiscal stimulus it could do, which we done through the NREGA program, it will be done for the rural economy. So we are taking a big bet on names like, Hero, Bajaj, as also M&M. All the stocks have done well now. Now my worry is that stocks run up quite a lot. Most of these names are pretty much back to their pre-COVID levels, or in some cases even above the pre-COVID levels, with some amount of downgrades to our March 22 numbers. I mean, I'm not focused on the March 21 numbers because they don't make much sense anyway. So clearly valuations have expanded, and that's the challenge over here.
Your thoughts on the big re-rating we've seen in Reliance? It's being called as India's FANG stock. Do you think that's the right way to approach this stock?
Clearly, because, part of all the old economy companies, if you can use that term, this is the only one which has, been able to manage the transformation. Nobody doubts Reliance's execution capabilities, and they have demonstrated that, time and time again, both in case of, all three areas, chemicals, and then refining, and now, telecom in a big way. So given the fact that the company has a lot of capital, very marquee investors and, solid execution capabilities, I assume it can make a big success on, the digital foray which it has adopted currently. Clearly, the opportunity size is also very large given the entire unorganized nature of retailing in India.
There has been general underperformance. I mean, the rising tide of liquidity has lifted all boats, but our boat isn't as high as the others. Do you see the underperformance getting corrected anytime now as we start unlocking?
We don't have that many technology, platform companies. If you look at the performance of the US market or the Chinese market, they have been entirely driven by the very large, tech companies, and we really don't have any companies in that category. So our own IT services company have done well. It's a discussion we had earlier. Reliance has obviously done well because it is seen as, the big technology play in India for the future, we haven't been able to do much of fiscal stimulus, and that's why people have a lot of worries on the financial names, and that's the reason why the Indian market is lagging so much compared to both the larger DM markets as also some of the larger EM markets.